Well, hello everybody. It's the April 3rd. It's the weekend review, and we're looking at a market that simply can't find a way to fall. Every week, it's a little bit more of a grind higher. Some of the grind is associated with the not so much the fundamentals, but just the outlook is not nearly as negative as it was 2 or 3 months ago. But the big thing has been the Fed, right? I mean, Yellen comes out this week, saves the market one more time, pushes everything higher, pushes the dollar lower, and the rest is history, as they say, right? It's the Fed. Markets are basically flat for the year if you average them out. NASDAQ index, Russell still lower, S&P, Dow higher, and one more week of up. And that's what, 8 of them now, if my counting is right. 7 out of 8, if I remember exactly right. So a strong week higher again. Technical summary. No matter how you slice it, this market keeps going up. But the concern out here, and you see it in the price action, is great. Yeah, we've got many more stocks going up now than we've had, in a year and a half. We've got, a lot of breadth in this market, but that's because a lot of this market was down, and we had tech stocks holding it up last year. But if you go look at some of these comparisons, and I just want to offer a few of these for you to glance at. I'm going to start here with the S&P itself, and if you look at the S&P and you say, wow, it's not doing too bad, and yeah, it's not. I mean, you've had this big range, right, that has formed, and we're almost at the top of the range again, and that's pretty incredible, actually, given the lay of the land in terms of what else is going on, and that's what I want to reflect on here for a second. So just remember, here we are sitting here at the top, in the very top part of this rectangular range, if you will. Let's impose some of these other things and take a look at them. For example, let's look at junk bonds. How are junk bonds looking with respect to the technical picture? Huge difference, right? I mean, junk bonds are just trying to get back to do a test of the swing point low. I mean, they're just getting into it now. So you've had a huge drive to the downside. That's fear, folks, and that fear really hasn't dissipated, even though the S&P has wildly driven back to the top side again. And if I look at another measure of the interest rate, bonds, high yield, HYG, a little less extreme than we see on the junk bonds. But again, here's the retest regen. I mean, it's got a long way to go. It's got these others inside of that. And if you go down here and look at this rise, this rally, I mean, look at the rally here. Look at where the tops were before and say, what's the difference, right? I mean, this thing's not even close, whereas the S&P is almost sitting at new highs. And then if we take and compare, just sectors inside the market. I mean, here's the S&P 500, the financial sector, right? The financial sector, if we draw that range like we did on the S&P, and let's just be liberal and call it about there, you can see here, financials are basically about halfway back. So again, not nearly as strong as the S&P 500. And if you look at any of these others, XLB, same thing, right? Draw the range in, maybe it's halfway back. Look at the XLE, not even close, right? Looks more like those bonds we just looked at. And then take some of these that have rallied crazy, like the XLI. Yeah, that one's almost back like the S&P 500, doing about as well. Technology, one of the few that's really stronger, right? That's because they never gave it up last year. They're still up there. But if you go to let's say discretionary, let's grab the discretionary here and look at it. That one too pushing back towards the high. So you got 2 or 3 sectors that have held on well. But if you go to any of the others, they don't look so hot. Any of the ones that are risk on. In fact, those that are risk on, the only one that's at new high is, look at your durables. They're like breaking out. They're like way over. That's quote unquote safety stocks. Look at the utilities breaking out as well, just broke out. These are on monthly basis. All of these stocks are telling us that something is going on here, that something is not quite right. And if you look at one of the most risky areas in stocks, biotechs, I mean, these aren't even close, right? They look more like the XLE. So risk on, yeah, but quote unquote safety risk, I guess, right? The markets are not nearly as strong as they appear. And I realize, that can come across as saying, we're valid in being concerned here. But realistically, this is nothing like we've seen before when you're trying to press new highs. And to push this ideal a little bit farther, I want to bring to your attention the idea that, this market really isn't out of the woods yet. And I know that it feels like it isn't going to stop and it's going to go up forever. But, if you go back and you look at the 2008 crash, right, that crash made a high in May of 2000. The high that we have now is May of 2015. If you go back to the 2008 crash, it happened about a year before the crash took place. So if you go back and visualize it, the market was going up, and it made a high, and that was like, if I remember right, it was about September or so of 2007. And then you had a big move down, right, and then some work in here and so forth. And then eventually this market came almost all the way back up. It was up into this area. And so the highs maybe were here, it was up in there, and then you really had the plunge. This scenario now is no different. I mean, if you look at the S&P 500 at this particular point in time, we have that same situation, right? I mean, we basically made our highs back here, the swing point high, and this was May of 2015, and here we are a year later, almost at the highs, rallying back, right? Have set a lower high here, and so far a lower high in this case. And now the question is this it, right? Is this thing going to come flying back the other way or not? I don't know that it is, but when I look and I see where the money has flowed to, and if I look around the world, those indexes aren't even close to their highs, that tells me that something is not quite right. And even though we're pushing back up here in this uninterrupted manner that just looks like it will never stop, the scenario looks very similar to what we've seen before. I don't know that we're going to get a crash out of this, but I do feel fairly certain that we're not going to go up here and start breaking out, right, and expanding this range to a new range that looks like that. I don't believe that's going to be the case unless something dramatically changes. Because right now, these indexes in terms of where people are putting their money doesn't suggest that at all. And if you step over to the fundamental side, that's very true too. I mean, this particular earnings season, 8.5% decrease in the estimates. Now, yeah, we could still get a bump higher because they could still beat those, right? They brought them down so far now that you actually can get all your beats again, which is always the case. That's how the market operates. But folks, the valuations now are higher than they were back in the peak of the 2007. When the S&P was making its highs in 2007 and then eventually come crashing down, we're higher than that now, right? The valuations now are even higher. And using fact sets, numbers, that's the situation. The other piece of it right now is the dollar has been stronger, not weaker, and the dollar is at the bottom of that range now. And so if you look at this and you say, way back here when we hit these lows, right, 2014, 2015, market was making its highs, and then this thing started that rally, right? And when it started that rally, the market peaked, right? The market peaked as this thing peaked, and the market's been going sideways ever since. This thing is in this range. We're down towards the end of the range. If you look at this fundamentally, I don't know how you argue that the dollar is going to come crashing back down. Every place in the world is trying to devalue their currencies with the exception of the U.S., although the U.S. lately, via Yellen, is quote-unquote trying to talk the dollar down. It's not going to last. This thing's going to go back up. It's going to stay in this range, and eventually it's going to try to continue higher. And that is going to be a problem, and I don't see how that's going to fit in with a stronger market. So even though we can't discount, and say, hey, this market's going to fall here, we can set some next targets and say, okay, this is, where it looks like it's trying to go next. If we look at the S&P 500, or if we look at the Dow Jones, which have been the strongest on this move, right? The target now looks like those swing point highs. They're going to try to change that trend and take it away from bearish to sideways. Now, in this particular model, right, you got to break a swing point to change the trend. Even though you've made this huge run, you still haven't even changed the trend. And the reason for that is that these are those anomalies where this market, when it makes these directional moves after a directional move the opposite way, it can never put in 6 bars to get a trend change, right? And so in that case, you get this weird situation where you've made a huge move and you still haven't even got a trend transition. It wants to relieve the pressure, right? These are starting to get extended. Swing point high breaks would allow it to do that, and it looks like that's the target. And that's true here, and it's true on the Dow Jones. If we move over and look at the NASDAQ, the NDX, the Russell, all of those are just trying to come back to the breakdown bar. And so the breakdown bar is here. They're trying to get into it. And actually, if you take the low of the bar it broke down from, it's up a little bit higher. That's where those are trying to go. It's true here on the NDX, on the NASDAQ, on the NDX. And it's also true on the Russell, which has been the weakest one by far, right? The Russell's not even, Russell's not even close to the all-time highs. 1293, it's at 1090, or 1100. So long way to go if it wants to climb up there. But the swing point high, the breakdown bar's high is the next targets for these markets. So even though we're still not out of the woods and the next targets are there, it looks like this thing can try and grind a little bit more, because last week we did not get that sideways to down move that we should have got off a 2-bar reversal. And when I see something like that, it just tells me, hey, the market is stronger than you expect, right? You got the signal, but the market wouldn't give you the follow-through that it should have given you. And that's the case where the market's saying, hey, I'm not ready. And if it's not ready, we just got to keep trying to work it a little bit longer. But believe me, we are so close to something larger. I do expect, and as I've said before, they're going to buy it when they first get that big dip. So if you expect this market to come crashing back down, it's probably not going to be the case. These moves up like this, if we get a move like this down, a significant one, it's going to take it right back and try to jam it higher again. They're going to buy that dip down there. They always do in something that's this strong, or I should say they almost always do. And so expect that to happen. Don't expect this to just come crashing down. It's unlikely to be the case. If we look elsewhere, what happened last week, it was even better than we expected on the best case scenario, and that was it's pushed even slightly higher instead of sideways. What's this week look like? If I were to try to handicap it, the best case is we go hit those breakdown bar swing point highs and, maybe grind a little bit higher after that. A worst case is we do a fast trip back down to those targets that we identified last week. The most likely case is we try to grind up to those swing point highs, breakdown bars highs. That just looks like the way it's set up here. Fundamentally, we got the Fed talking again. Every time they have their meetings, they talk for a couple weeks. We got another Fed meeting this month, about 3 weeks out. And so this will be the last week that we hear them yapping. We even have Yellen talking again this week as well. You got all the monthly beginning month numbers, the PMIs, the factory orders, the ECB, FOMC meeting notes. All of that will be out this week. If you look around the world, the economic data that we've been seeing lately certainly improved here in the U.S., but around the world, mediocre at best. And so you have this huge divergence between strength in the U.S., even though it's moderate, it is strength, And elsewhere, they're just really struggling to produce anything to the upside. We also have earnings season, as we talked about just a few minutes ago, coming up. It's a couple weeks away now. We could get a push up, but folks, we have pushed up hugely already. And to assume that we're going to just continue higher with this market as beat up as it had been, and then this big spike, unrelenting spike higher, is really asking for a lot. Even though those expectations are extremely low now, it's going to be hard unless we get companies coming out and saying, oh, the future is very clear and we're going straight up. If that happens, then yes, maybe we can get a move higher, but it's going to be very difficult. That's a couple of weeks away. The more likely case, in my opinion, is that rather than grinding higher into earnings, as we get closer to earnings, right, we've been doing this, as we get closer to earnings, expect something to give us a pullback, and then the earnings will try to push off of that. I think that would be the more likely scenario. So you got a couple weeks for some sort of a pullback to try and manifest itself. That's it for this week. It's even though we've made some good monies on some of those, beaten down plays, personally, and some of them I've identified for you. Some of the best earnings plays lately have been those where the interest has been, the short interest has been huge. It's been a difficult market to continue to follow higher, and I know that the tendency is to try to short things, and I've tried it a couple times and it just doesn't work. When the market's pushing up, you just got to try to go with it, and it's hard to do, but yes, until it stops, you just have to try to do that. And now, it's fairly clear that whatever pullbacks come, they're going to try to jam it higher again. So it doesn't make sense to try and short this market at this point. Let's let it pull back. Let's let it push up again, and then let's try to do something off of whatever this ends up telling us. My suspicion is that we're very close to a more major top one more time, and that we'll get something deeper after that. But we'll have to let it play out and see if it plays out that way. That's it for today. Thanks. Take care. See ya.